When we chatted a little earlier, we were looking at the rand at around 678 or so. We've sitting in now pretty much in the same picture, 680, 681. We've seen the dollar gaining ground significantly. We know the euro had recovered slightly. What kind of targets can we expect for the rand this week? Of course, that said, we've got quite a bit of economic data in the country that we could look forward to.
Well, on Friday we saw the rand strengthening in very thin trade on the back of firmer commodity prices, increased risk appetite associated with the rally in global equity markets, and as well as broad-based dollar weakness. But it did, however, lose some steam at about 672 ahead of the weekend. This morning we saw the rand weaken further towards 680, and again that's really on the back of the fact that we're tracking euro-dollar movements. As you mentioned, the dollar is gaining some favor against the euro, as EU members are now saying that they're expecting to grant Greece only half of the $12 billion loan next month. So we do expect some weakness to come in from the currency on the back of the renewed risk appetite for the greenback. We really would expect to accumulate dollars this morning with a target of about 682. But if we see a breach to the upside, we could see a move towards 687, if not 692 in the short term. We do see a trading range of about 676 to about 684 for the moment.
With regards to the rest of the week, I mean, you're talking about 670 to 684. Do you think there's a chance we could weaken even further, or do you think that there's such lack of clarity on a global level that we're just looking at things on a day-to-day basis?
We are looking at things on a day-to-day basis, and as I mentioned, we are tracking euro-dollar movements. But if we do see some softer data coming through from the the quarterly bulletin later tomorrow, we could see some renewed pressure come through for the rand. If we do see the current account deficit widen more than expected, we could see that the rand come under renewed pressure as well.
Of course, you mentioned, yes, quarterly bulletin out later on this week. Current account numbers definitely top of the agenda. We could also get a little bit of information in terms of the health of the South African consumer. We saw a fantastic retail sales number for April. We mentioned it a bit earlier, 9.8% growth year on year. What are you expecting there by way of the consumer, the health of the South African consumer, if anything at all?
Well, the health of the South African consumer is pretty good at this point. As you mentioned, the retail sales data is at about 9.8%. We also saw manufacturing data recently come out quite pretty well. But I don't think that is really sustainable through to year end. However, we are seeing the consumer coming through with a very robust demand. We're seeing imports as well come through very, very nicely, and it's really showing the resilience of domestic demand at this point. So we do see the health of the consumer being really up there, and we expect that to continue through and to translate into very better growth rates for this year. We're seeing Standard Bank is penciling in a growth rate of about 3.8% this year from 2.8% last year. So very good data expected.
Of course, yes, and the IMF talking about 4% this year. Inflation also under the spotlight. CPI previously at 4.2%. Consensus coming to the fore at around 4.5% or so. I know that Standard Bank is expecting a CPI to hit around 4.4%. Is this going to be market moving, or would you say most movements have been priced in at this point?
I think most movements have been priced in at this point. We also have to remember, though, that May is a very soft survey month, so we don't expect very high numbers to come through. In fact, there's more risk of downside pressure on that number, so we could possibly see a lower number come through. However, the oil prices, food and fuel prices are likely to continue pressuring the CPI number higher as we go forward for this year. We do, however, expect an average of about 4.9% for this year.